Guys, good evening once again. Just Katabaz here. We're going to walk through this document on financial statements, just to give ourselves a better feel. And then we do a number. Okay. So financial statements for non-profit organizations are not the same as financial statements of for a profit organization. Okay, and the differences are really not very significant, or they're not very many, but they're still there. So what remains is, well, we had statement of profit or loss. This time we call it statement of activities. Okay, or we can call it statement of financial performance. Then you have a balance sheet or statement of financial position, and then statement of cash flows. Okay, so shall I first stick on the first two, activity and balance sheet, and of course they're led by standards. They're led by standards. So saying there's analysis of financial statements. This will provide examples of internal and external vulnerables or vulnerabilities indicated through the financial statements, future improvements that could be made to increase financial stability using budgets, and vital roles the three documents play in the health of a non-profit organization. So financial analysis, like we are studying in the course, basically gives you an understanding of what the business is all about. If you're telling us you're making a profit of 20M, we're saying, are you really making this profit? Okay, now for this case, for NGOs, it's not profit, but it's rather maybe a deficit or a surplus. You're telling us you have a surplus of 20M, but is it really there? Okay, or if it's there, is it in cash, or it's the things of credit accrued? Yeah. Or the depreciation is doing a good job in trying to manage that amount. So things like that, financial analysis helps you to really get an understanding of those. So we want to go into that because we're here to prepare these. And then we'll go to accounting methods. The accounting methods are mainly three, if you remember. We have the cash basis, where we only record transactions where there's a receipt or payment of money only. Okay. Then B is, or the second one is okay, I think my network had gone off. Sorry about that. So I was saying the three accounting methods. The cash basis, I've already talked about it. I can just repeat. I've said that we only record transactions or financial transactions where there is payment of money or receipt of money. Other than that, we don't record. Okay. I've heard of credit sales and credit purchases. Okay. Because there's no money involved, we don't record those transactions under cash basis accounting. Then accrual based accounting is what I just said, the opposite. For accrual, it records credit transactions. As long as the transaction has occurred, regardless of whether money has passed or not, you're going to what? You're going to record the transaction. Okay. And then you have the modified cash accounting system. This one here, it's very close to accrual basis. Okay. But it keeps in mind a few items regarding accrual. Not all items qualify under modified cash accounting. Okay. So in short, modified cash accounting records cash transactions only. However, it makes exceptions for a few transactions for the accrual part where there's no payment or receipt of money. Okay, so maybe for modified, you can just read a few things, because for cash, we all know, and accrual. For modified, we can just add ourselves little tips on those. They say that here books are kept on a cash basis, except for a few accounts, okay, that are kept on accrual and that are usually updated only at the end of the month or at the financial reporting time. I think I've just talked about this now. Okay, so that is it. Find some time and read through. Then they're saying, what are we trying to address whenever we're using either whenever we're preparing these accounts? Okay, they're saying, maybe before I read that, I start from here. They say that to avoid accounting problems, okay, a non-profit must review the entire organization as a whole and implement an accounting program suited to its individual needs. Yeah. To do this, an organization must address 5 questions. It's more of an accounting system. Okay. So here they include, you want to know the personnel. What personnel are responsible for each duty? Before you think of your system, what personnel are responsible for each duty? What are the safety mechanisms in place for the organization's resources? Okay, safeguard them. What approval and authorization systems are needed or are in operation? What methods are available to verify the safeguards? Then does the organization have any insurance to cover the losses? These are the things you think about as you come up with an accounting program for a not-for-profit. I think the list could be longer, but there are mainly 5. Okay, so I won't go into that. Of course, we prepare these statements based on generally accepted accounting principles. Okay. Okay. Then we have characteristics of financial statements. Okay, and financial analysis of statements, the cost unit. The characteristics are different from these ones. Okay, so try to appreciate them, that they're different. Now here, there are 5 and they include the following. That they should be easily comprehensible or comprehensible or easily understood so that any person taking the time to study them will understand them. That is one characteristic. The other is they should be concise so that the person studying them will not get lost in detail. Okay, concise is more of being clear and short. Okay, then they should be all inclusive in scope. Okay, all inclusive meaning that all activities should be included or should be reported upon. They should be prepared on a timely basis, that is a constant. Otherwise, reports that are not timely, they don't aid in decision making and therefore they're useless. Okay, then in addition, statements should reflect the organization's position as accurately as possible. Okay, I feel also missed out on saying should reflect the organization's position and performance as accurately as possible, but no, it is, it's the way it is. Then this, now we talk about now items. Okay, we're looking at statements and then what falls under each statement. So we shall start with the statement of activity, what you call statement of operations, or what previously would be called the income statement. So here saying that some of these we have, of course, we know we have revenues and expenses under statement of activities, revenues and expenses. Now under revenues alone, we have contributions. Okay, they come in form of grant, donations, public contributions. Then you have program service revenues. Okay, in case you offer programs and maybe you usually receive a payment for them, maybe there's a training you make and you're paid, that is revenue. Membership dues, in case you have subscribers. Special events, revenues, okay. Investment income, in case you invested somewhere and it's giving you returns as an NGO, not NGO, but others, not for profit. Okay. Then we look at expenses now. Okay, so sources of revenues you have seen. I can look at expenses or expenditure. We have program expenses or expenditure, like delivery of goods, like maybe uh, field field allowances, among others. Okay, then you have fundraising expenses. Okay, in case of coming up with maybe special revenues from a special event, so you may incur some expenses, like maybe advertising, maybe making calls to your potential investors. Okay, remaining members, the expenses that you incur, we call them fundraising expenses. In short, any money spent to come up with the revenue should be under operating expenses. Okay, admin expenses, that is for sure. Now, incomes or revenues have a classification, or they classified. Okay, and they classified into three. You have unrestricted, as you can hear the word unrestricted. Usually, these are revenues you use as a not-for-profit. Use them the way you want. Okay, they don't have any form of restrictions or limitations. Temporary restricted, these ones are they usually tend to unrestricted. Okay, because for them they usually have what we call conditions that you're supposed to meet, but they're timely. Okay, and maybe they also they can also be they can also be met. So once they're met, then it ceases to be temporarily restricted and it becomes unrestricted. Then permanently restricted, usually these ones have conditions that are here to stay. Okay, that these conditions don't, you can't exhaust them. So the funds remain restricted. So what happens is usually there are conditions to them. They will tell you maybe, for example, giving you 20M, but this 20M is going to be spent on management only. So even when management is less or the budget is low, you just have to spend the money on management by either forwarding it next quarter or hiring a new manager. Okay, so it's permanent. You cannot say that in case in case the number of managers drops to one, you use the money for other things. And that condition is different. That one is more of temporary. That in case there were two and they're being paid 20M, if one goes away and you're left with one, the money can be transferred to another thing, making it unrestricted. Okay, so that one becomes temporary. But where they're saying it must only be spent on management. Okay, that means that where even managers reduce, the money can be for it the next period, but not being used for other things. Okay, so I hope I've emphasized or I've explained that well. And then, okay, that is a statement of financial position. Of course, for statement of financial position, you know that you have assets and liabilities. Okay, and we have non-current and current assets, then non-current and current liabilities. Okay, those ones we know them from our past. Okay, just examples because there's some examples that stand out. And then net assets or changes in net assets. All right, so guys, we're going to do a number as soon as we join again. This link is going to close. So join again, we do a number. And I shall do, I think, this one. Example one. This is budgeting. So shall look at this and then see what you can do. Look at the format and then do it now. Okay, see you shortly because this link is going